Good afternoon, my friends. Welcome to today's show where we will be talking about Beyond the Charts, trading through the lens, bear markets, wisdom, and the edge. What does all that mean? These are questions that came from Instagram. The other day, I posted a survey on Instagram asking people, well, what do you guys want to hear about? And these were the three main questions that came up that I thought that would be great to talk about on the show and to dive a bit deeper into. First was identifying the start of bear market. I actually think that that one's very appropriate considering where the market is. Personally, well, I'll give you my thoughts on where I think that we are in a moment, but that was the first question. Second question was the quote unquote essence of trading wisdom. And then finally, number three, unveiling your trading edge. Well, what is a trading edge? How do you get it? Give us the insights on that. Those are the questions that were asked to me on Instagram. And so we're going to go deeper into each of those. But while we're doing this, I also would love to hear your questions, those of you that are here with us live. So go ahead, type in any kind of questions that you want as we're going through, and then we'll do a full open Q&A at the end, if that sounds good to you. Also, let me know where you're logged in from, like, share, and do all those things that people ask during live streams. All right, let's jump in. Okay, so number one, identifying the start of a bear market. I thought that it would be helpful to first have a definition of what a bear market is. So a definition, it's a drop of 20% or more on an index from the top. The average distance now between bear markets, right? So you have a bear market, then you have a transitions into a bull market, bear market, bull market, etc. And then that's how the story goes. Your average distance between a bear market, between the start of the bear market and the next bear market, tends to be about 3.5 years. So I thought that that was very interesting. Then I went back in history and I asked, well, what was the shortest period between two different bear markets? And it happened between 2018 and the bear market that we had during COVID in 2020. So 2 years was the shortest. So if we take a look at the charts, right? I'll pull TradingView over here for a moment. All right, so here's a chart of TradingView. Here's a chart of the S&P 500. The bottom of the bear market was in October of 2022. And then you probably would say that you weren't really out of it until over here, right? By May, when you finally finished bottoming and then you started to rally off of those lows. So depending upon where you say that the bear market is done, you might say October 2022, in which case the shortest period ever between 2018 and 2020 would then be coming up in October of 2024. Now that's pretty interesting, right? Then you would also have this marker here, May of 23. So in that case, it would be May of 2025 at the absolute shortest. Now, if you're doing averages, then of course that extends. But just to give you a picture of where things might be at, given that scenario there. All right, so key indicators to watch. Some people like to look at economic indicators. Some people like to look at sentiment indicators. I don't like to look at GDP or unemployment rates or anything like that. I don't really like to look at investor sentiment and surveys and going onto the internet and trying to figure out, well, what are people saying? Those things tend to be more beyond me, but where they tend to be more open to and subject to my personal interpretation. And I don't feel that I am able to compete with that because there's entities out there that have scores of analysts coming up with their own interpretations of different economic data. However, I am able to analyze certain technical indicators and be able to do that very well. And the reason why I like these technical indicators, and I'm not talking about like MACDs or derivatives. I'm talking about simply price and volume, and everything else is a derivation thereof. What that helps us do, and this is what I do. This is what I learned how to do through the IBD meetups for more than a decade, by studying Canton Slim, by studying O'Neill, by studying Mark Minervini and people like that. Well, what I've learned is that the major institutions of the world, right? Your hedge funds, mutual funds, pension funds, the ones that are using those economic indicators and the sentiment indicators and those kinds of things, they make decisions based off that. Their decisions are made and are reflected right in the chart, right? Because they're the ones that are making their decisions and then they're putting their money to work. So we could see what their decisions are and see that developing in real time. What we're also able to see and understand is that they're moving around billions of dollars. They can't fly into a position like you and I can. Well, we can put our whole account into a trade and not move the market. So we could see what they're doing and come to an understanding and interpret it. That's what I like to do. That's why my lone bullet is right here. And so I'd like to share with you some real world examples, and going back to the most recent bear market that we've had in 22. So here are some of the things that I look at when I'm looking at bear markets and trying to look for early warning signs. The first, distribution. Now, what is distribution? Distribution is institutional selling, meaning that the big boys, your hedge funds, mutual funds, pension funds, that they are busy selling in the market. How do we know when that's happening? How do we know what distribution is? It's a down day on an index of at least 0.2% or more on heavier volume than the day immediately before it. That's the definition of distribution. There's typically a dry up in the number of stocks making new 52-week highs. There's typically an expansion in the number of stocks making new 52-week lows. Stocks that are setting up in base patterns, right? So stocks that have been consolidating for 5, 6, 7 weeks, somewhere in that vicinity. They tend to be very low quality, like they're very choppy, they're wide and loose, they're all over the place. That often symbolizes late stage action. There tends to be fewer and fewer setups overall, and setups are underperforming. So I want to share with you my spreadsheet where I track all of this stuff. This is a spreadsheet that I track and I share with my members. I will make my face a bit smaller here so you can see this. So I'm just gonna scroll down to 22, right? So end of December, actually was really towards the end of November here when things started to go awry back in 21. So if I pull up a chart of the NASDAQ, right? Well, let's go there. This is the S&P 500. Let's go over here to the NASDAQ, and I'll turn off my annotations on here because I like to draw all of the charts, right? But basically, I started to get out of the market right back here, right? Flip this back on. You can see that we were in a green condition. Then we flipped over to red, and there were many different red conditions. Sometimes you would flip back to a yellow condition, but were predominantly in red for the bulk of this, right? You got a little bear market rally there, but you're really in this red zone where things were in deep trouble for a long period of time, and you didn't start to come out of it really until over here, right? Like you have some instances where you're starting to get better, but you started to be a little bit more consistent with it later on, right? Over here, you had this little consolidation. Over here, pullback, and then it's been good since then, and we'll see where things end up now. But for back here, right, there were all the things that we were talking about in that slide to remind you of what the slide said. There were all these things here, right? Get my face out of the way of it. Setups underperforming, dry up in breadth and quality of setups. Let's take a look at the spreadsheet and I'll show you exactly what we were talking about. So all that was happening back in here, back in November, and I'll make my face a little bit smaller again. Let's zoom in. All right, so you can start to see that there was downtrends on the market, downtrends on the daily time frames, downtrends on the weekly time frames. I'm analyzing the indexes, the market as a whole. Then I'm starting to look at, well, what were the number of distribution days? How about the number of stocks making new 52-week highs versus new 52-week lows? We've got that over here. The number of stocks that were making new 52-week lows started to outpace the number of stocks making new 52-week highs back on November 17th. Back then, the market was making new highs, right? Let's zoom in on this a little bit, just to show you what I'm talking about. Over here, right? Market's starting to push higher over the next couple of days, while you had more stocks making new 52-week lows. That to me is a gigantic clue, and it's one of the reasons why I color code it as this red condition. The reason why I mark new lows automatically whenever I start to see the number of stocks making new 52-week lows start to outpace new 52-week highs is for this very reason, is that the market could start to roll over and it helps me to get out of the way. I see some comments coming in. Just be specific with your comment. I see Darren saying, could you repeat that? Yeah, just write briefly what it is that you want me to repeat, and I'll gladly repeat things. All right, so new highs, new lows, that started to become problematic. We have this thing right here, right? Oh, need to be sharing my screen. This started to become problematic right over here, the distribution day count, right? Like that. So the distribution days, that's something that starts to get peppered in. And sometimes distribution is bad when it starts to cluster. Sometimes it could be a good thing depending on where you're at in the market cycle. So all this stuff needs to be taken into context. I don't expect anybody to really be a master of any of this after watching just one live stream, right? If you feel that way, then you're going to be sadly mistaken. I mentioned that because I used to think that way. That's a very naive way of thinking. But you stick with this sort of systems and processes and just looking at things over and over and over again, and that's how you gain much deeper understanding. Anyhow, let's talk about the trade ideas at this point. You can see over here that the trade grades started to fall, and the performance of the trade setups, right? And I'll find all the different trades that I'm seeing, and I will track them throughout the entire week. So if you're on our newsletter, and I encourage everybody to join our newsletter, then if you go to marrowwealth.com, you can find your way onto the newsletter. Anyhow, but back to this. I will track all the trade ideas that come out in our Sunday newsletter and see, well, how are they performing? Right? Because yes, I do want to trade some of them if they're of very high quality, but I'm not going to trade all of them. But I do want to know what stocks are setting up in the market, because how the market treats those stocks is going to give me a huge tell on how the current environment is. So think of it like this. You go to the market and you find a bunch of apples. Right? You're in the market for apples. You show up and they're nice, they're clean, they're crisp, the market is fully stocked. You take them home, and then you go to bite into one and there's a worm inside. "Ah, that's disgusting. Maybe it was just that one." Then you bite another one, same thing. Bite another one, same thing. Well, guess what? There's something wrong here, right? Maybe you go back to the market, you bring those apples back, you demand your money back. That's what the stocks are like. But the only way that we could really know that is by continuously to track all this, and that's why I go to this level of effort here to track, well, what setups am I seeing and how are those setups performing, and I do that every day. It sounds like a lot of work. It's not, especially when you have a routine that's dialed in. Sure, maybe it takes a little bit to set up this kind of a routine, but I was doing the same kind of stuff back when I was working full time, and I would do this at night and on weekends, and it really wouldn't take that much time. It takes me longer to explain it than it takes me to actually do it. And if you want my help, reach out to me, and I'll be able to help you with this. We have a whole program. If you go over to marawealth.com, you can check those out. Anyhow, let's bring the slide deck back up here. And you see a few different questions coming in. Let me browse through those before we move on. Darren's asking a bunch of questions. Darren is one of our members in our Mara Elite Premium program. He's also a meditation coach, and he's been leading meditation groups this past week. We're planning to do another one. It's fantastic, and he's a fantastic guy too. So, Darren, shout out to you. Thank you so much for doing what you do and contributing to our group. Let's see. In your example, was the market going up while it was showing all those new highs and new lows? Yes, it was. Yeah, so if we go back to the chart, right? And so this is a chart again of the NASDAQ, and I'll make my face a bit smaller so you can see better. This here is a chart of the NASDAQ. At the time, it had pushed into all-time highs over here, right? So that's an all-time high, that's an all-time high. And you can see this indicator down here. I'll make this indicator a little bit bigger. This is tracking every day the number of stocks making new 52-week highs and the number of stocks making new 52-week lows. So on this day here, there's more new 52-week lows than 52-week highs, and over here, right, for this whole string. So the market is pushing higher, but there's more stocks making new 52-week lows. That is a big problem. And that's why whenever I see that, I get defensive. Sometimes the market can bounce back, right? And then it's like, okay, risk back on. And it's also, right, because I'm not just going to dump everything automatically when I see that happen, but it is a tell for any new position that I'm thinking about, right? Because if there's more new lows being made than new highs, I should start to get defensive, perhaps with the positions that I'm holding, but also if there's a new trade that I'm starting to think about and it's a bullish setup, but the market is giving signs that it's topping out, how heavy should you go, right? Probably not as heavy as if everything was copacetic. Yeah, it really is a fantastic indicator. One of the IBD meetup leaders, shout out to Richard McKay. Richard, if you're watching, I'd love to reconnect with you. But this guy, Richard McKay, he would do that. He would track in the paper every day. They would post the number of stocks making new 52-week highs and 52-week lows, and he would do that on the spreadsheet. And I thought, that's an amazing idea. I adopted it, and I've been doing that for years and years and years now. All right, moving on. The essence of trading wisdom. Defining trading wisdom in the context of trading. So, let's start to think about, well, what does it mean to be wise when it comes to trading? Well, first off, I think that a big part of wisdom has to do with our beliefs and our experiences. Well, would you agree with that? If a large part of wisdom has to do with our beliefs and our experiences, well, then step one would be to cultivate many great beliefs. Now, how can we cultivate many great beliefs? Well, there's a variety of ways that you can do that, right? You could read a lot of great books. You could get around a lot of great people. You could consume great content. But is that the only thing that you should do? Well, no. The reason why you need to start to go deeper in order to have trading wisdom is because if you picture this, say you have a bunch of seeds, right? Like let's say that spring is almost here. You have a bag of seeds, and you're just going to go into your this patch of lawn that you haven't looked at in a long time, and you're just gonna be like, you know what? I heard that you should overseed, right? Because you want your grass to grow. So you just walk over and you start throwing seeds everywhere, right? And you expect that you're going to have great success doing that. How well is that going to work if you don't water the seeds? If you don't weed the ground beforehand? If you don't till the earth, right? Because if you just, if the ground is very hard, right? And I've learned this from my own lawn. Hey, if the ground is very hard, then the seeds won't get into the soil as well. You have to dig it up a little bit. You also need to make sure that you're not throwing seeds into a whole patch of weeds, because that's not going to help you very much either. So what we could do this with our minds as well. How do you do that? You start by writing out your beliefs. And I've written a couple of blog posts about this. If you go over to the website marwealth.com, you can find those blog posts. Just go to the learning section and you'll find the blog posts. But the idea of this exercise is to write out your beliefs about trading, write out your beliefs about money, write out the beliefs that you have about yourself. Well, we literally have hundreds of beliefs about all these things. Write them out, and then you could start to see, well, which of these beliefs might be a weed. How could you define a weed? Well, if it's very limiting, right? If you start to find conflicting beliefs about different things, maybe you think that money is scarce, money's hard to come by, that you need to work hard for money, those kinds of things. I grew up with all that stuff. I grew up poor. At one point, I was homeless when I was a child. I had many limiting beliefs about money, and also very poor beliefs about the types of people that had lots of money. So if I wanted to be a trader and I examined my beliefs and I found that, oh, you know what? People that are wealthy needed to do something very underhanded to accumulate all this wealth. And if I also had a belief that I want to be a good person, how do you reconcile those, right? Well, in the market, you end up self-sabotaging yourself, right? Because you start to have some progress and then you want to be a good person and you're accumulating all this money, and that could pull you back down if you're holding those two things simultaneously. But if it's living in your subconscious, you might not be aware of it. So how do you bring the unconscious to the conscious? You do an exercise like that. That's one thing. What else? Experience. A lot of trading wisdom will come from your own experience. So let's say that you've tilled the soil, you've pulled many of the weeds, you've read some great literature, and now you're starting to acquire much better beliefs about trading, things that can empower you. The next step is to start to gain experience, right? So to actually take what you're learning and put it to work. Take what you're learning and put it to work. That's the power of having solid trading routines. And a great part of a trading routine is going to be, how are you going to continuously improve? There's a couple of ways that you could continuously improve. Aside from reading books and surrounding yourself with other people, you want to be journaling. You want to journal all of your trades. Well, what does that mean? That means actively tracking your trades, your thoughts throughout the trade, what your plans are, all those sorts of things. And then when the trade is done, coming back to your journal and analyzing it. What worked well? What didn't work well? What could be improved? And then as you start to have these thoughts and these theses of what could be improved, then you want to test Well, would that have worked? You don't want to just have an idea and then just try to do it in real time, because you could end up down a path where you don't know where you are or how you got there. So you want to have a testing environment where you can do that. TradingView makes it very easy. Having spreadsheets does that very easy. I track all of my trades in here, right? Like, so right now I'm in cash. Back here, this has all of my trades. I started this spreadsheet for everybody going back to 21. Here's some of the more recent trades that I've been in. I have my trades here, my notes here. And all this gets tracked for me, but I share it with everybody else so that way all of our members could learn. Then, of course, understanding market psychology. What's market psychology? Well, market psychology is, at least in part, is what we spoke about before. How we were reading the charts and understanding and interpreting the market data, the price action. There's one of the many, many wise things that William O'Neill said in his book, How to Make Money in Stocks, is that if you want to learn about fish, go to an aquarium, sit in front of the tank, and watch fish. That's how you're going to learn about fish. The same thing could be said about the market. If you want to learn about the market, put yourself in front of the charts, observe, go back in time, study the chart one day at a time and see how the chart develops over time. My friend Mike Webster, who is on Twitter, or should say X, he's been putting out homework assignments recently and they've been fantastic. He's been saying to do exactly this. Go back into the charts, right? So let's say that let's say that you wanted to study NVIDIA, right? Well, let's pull up NVIDIA. And let's just say that over here, you wanted to study this one bar at a time. Right, so let's turn off all this stuff here. This is a weekly chart. So if you wanted to understand how this moved week by week, you just go to the replay option and then advance the bar 1 week at a time and see, well, what decisions would you make based on how this is moving? Would you enter? Would you exit? Would you hold? Well, what would you be doing as this chart progresses? And what do you observe as this is happening? What's the price? What's the volume? What's the relative strength line doing? What are the other indicators on the chart that you care about? What are those doing? Do that exercise for stocks that you're interested in, for the indexes that you're interested in. You can do the same thing if you're trading crypto or Forex or whatever. That is how you learn. And that's how you build wisdom. Just saw something pop up over here on YouTube. Let's see. It's from I'm Third. When the market is in pressure like this, how did you make yourself to be patient and wait for an opportunity? And what is the lowest position size that you use to stay in tune with the market? Very good question. The way is this right here, wisdom. Wisdom isn't something that happens overnight. I'm still gaining wisdom. Another 10 years goes by, this guy that's talking to you right now is going to be even more of a dope, right? That's how trading works. I still make plenty of mistakes in my trades. I'm by no means perfect, but that's one of the ways that we learn. If we are actively seeking wisdom, if we're actively seeking knowledge, that's how we're going to acquire more of it. Again, the way that I'm doing that, through journaling, through a routine, tracking the market, tracking my trades, tracking my trade list, doing that every single day, and studying it, talking with other people. doing live streams like this, talking with our members too. I learn from them. They more than they even know, and I tell them all the time that I'm constantly learning. I'm constantly learning from them as well, from the comments, and not just what people are saying, but the types of questions that people ask that makes me think deeper. Everything has the potential to be a great learning opportunity if we're open to it and if we're approaching it with that sort of intention. That is how we can learn. Now, as far as the lowest position size that I'll enter into a trade, 6.5% of my capital is the lowest. And the lowest risk that I take, I always try to take the lowest amount of risk possible on every single trade. The lowest I would say that I've done is probably about 0.1%, so like 0.1% of the capital at risk. So if my entry and my stop can be like this, I love that. I'll do that all day long, because if my risk is this much, then my potential profit can dwarf the risk, and it makes being able to pay for little tiny risk amounts that much easier. Let's keep going, and then we'll do some more questions. The ultimate trading edge. Yes, so someone had asked, what is a trading edge? What is a trading edge? A trading edge is something that is proven to generate profits over many, many trades, right? So some people get confused about what an edge is. Some people think that an edge is you make money once and then that's it. That's your edge. Or maybe you make money 10 times and that's an edge. That's good, but I wouldn't call that an edge. It needs to be proven. It needs to be proven over many, 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 many trades, over many cycles. So that way you know that if you do this edge 100 times, 1,000 times, that you're going to make money with this. That is what an edge is. So how can you have a strong edge? Well, there's a few things that you need to do in order to have a strong edge. The first thing that you're going to need is a strategy that's actually proven and that it actually works. There's plenty out there that have been historically back tested, and you could learn and study those. I started with CanSlim, then I moved on to learning from Nicholas Darvis and Mark Minervini, Jesse Livermore, people like that. I studied their work, took bits from here, bits from over there, and put it together and customized it for myself. Then it's discipline, sticking to your system. And that doesn't mean just, having the blinders on and not doing anything else. Well, what it means is that you're sticking to your system, but you should also, for every system, there should be a continuous improvement process for that system. So that way you're always learning, right? So it's not where I'm going to trade the same pattern no matter what in every single market type. Well, what if you're trying to trade a flat base and we're in the middle of 2022? Or we're at the start of COVID, right? Or we're in 2007, or we're in the dot-com bubble. What's happening then? Should you be trading your flat base? Well, if I see this flat base and it starts to break out, I should just buy it. Well, how clear of a definition do you have? Do you have a level of discernment of what makes a good setup versus what makes a bad setup? Whether it's a flat base, coupled handle, or whatever kind of thing you're trading. How do you discern between good and bad? That's an important part of the system. How are you going to manage risk? Right, well, we mentioned earlier when I'm third asked about position sizing. That's one way that I manage risk. How big of a position am I going to take? How much of my total capital am I going to put into this trade? Another thing that I like to do is to see, where am I going to enter? Where am I going to cut this thing if it's wrong? If it moves against me? That's another way that I'm going to limit my risk. Those are the main ways to limit risk. Some of you out there, maybe you're trading options Maybe you're using other elements of diversification. There's loads of ways to manage risk. Adaptability and resilience. So we kind of touched on that a little bit, where we're not going to be trading the exact same thing in the exact same way 100% of the time, because it's not going to work every time. We need to understand not just that our system works, but we also need to figure out when is the ideal time for our system and our processes. And we could be trading fairly similarly to somebody else, and somebody else could be crushing it, and it might not be our time yet. So much of trading is know thyself, and to be able to adjust and adapt and to continuously improve. Building and refining your edge. Yes. Finally, whatever your edge is, it has to align with your beliefs, your goals, and your ability to execute. If any one of those three are missing, you are in deep trouble. The reason why: you cannot execute something that you don't believe in. I could give you the best system on the planet. Mark Minervini posts his trades and he posts his system and has written many books about it. My good friend Dennis Wilborn has had a long track record of success, generating on average 40% per year. He details his system in his book, Trade Your Way to Freedom. I give exactly what I do in my book, The Trading Mind Wheel. If you don't believe what's in any of these texts, it doesn't matter. You won't be able to execute it, and that's where people go astray. And that's perfectly fine. You need to trade in alignment with your beliefs. You need to trade in alignment with your goals. And it's more than just your financial goals, right? Like if I want to generate 100% per year, someone was asking me that earlier. If your goal is to generate 100% a year, okay, that's one goal, and you need to trade a system that aligns with that goal. But let's say that you also have a goal that, I don't want to be in front of the screens all day. Well, if I handed you a day trading strategy that required you to be in front of the screens all day, or a scalping strategy that required you to be in the screens a lot, then that system's not going to work for you either. That edge is not going to work for you either. So there's that part of it, right? It's more than just a financial goal. It's a time goal. It's a lifestyle goal. Well, what exactly do you want to do? And then you have to be able to execute, right? And I fell into that trap before too. And what you're able to execute today might be different than what you're able to execute 6 months from now. Let's say that you are going to be a new parent, right? You're not a parent yet, but your child is born 6 months from now. Guess what's going to happen? Your life is going to be turned upside down. Maybe what you're able to execute well today could change then. Maybe not completely. Maybe you need to tweak some things, but you better be aware that you're going to need to make some changes, because if not, you're going to learn the hard way. That's what happened to me. And so that is what you need for your edge. Now let's get into some additional questions here. Let's see. Darren says, I put a small amount in, like $500, which is small for me, but just enough so I enjoy the wins, but feel if it's losing. I treat the trade exactly like a real trade. Yeah, that's good as well. And if you are starting out with a small amount is going to be different for different people, right? So one person, $500 might be a small amount. Somebody else might say, well, that's a lot. That might be all that I have to start out with. And so maybe that person is starting out risking $50, right? Whatever the amount is, if you are starting small, make sure that if you lost the entire thing, that it wouldn't hurt you, but it should sting just a little bit. So that way it's not where you don't care about this at all. Another thing when it comes to trading, and I just heard this from my good friend Jason Greystone, Uh, by the way, there's plans for me to appear on his podcast in a couple of weeks. So if you don't know who Jason Greystone is, look him up. He's on Instagram and YouTube and a bunch of other places. But something that Jason had said was that trading is not a great way to make money. Trading is a great way to grow money. And I thought that was very interesting. And I actually agree with that wholeheartedly. If you are just trying to make money trading, right, then you're not focused on trading. You're not focused on giving yourself, making yourself available to the opportunity. You're trying to pull something out of the market, and that's not really how the market works. The market is a great way to grow money, where you're able to wait for the opportunities to come, put it in, and let it do what it needs to do. But if you need to make money, then trading is going to be very hard for you, and that's a lesson that I learned the hard way many, many, many times over. God, I can't even tell you how many times I've learned that lesson, but it's a very difficult lesson. Let's see. Well, what other questions are coming in over here? From Instagram, how to pull the trigger while initiating a trade. Okay, so if you're trying to figure out, well, how do I pull the trigger on this trade, then that's telling me that you could be experiencing a few challenges. Well, one of the challenges we spoke about earlier, or we touched on earlier, was about your setup. Do you have a clearly defined setup? And by clearly defined, I mean, do you know, if you're looking at a chart, do you know how long the base should be, how many weeks it should be? Do you know how deep it should be? Do you know what makes a good one from a bad one? What sort of indicators are you looking at? Do you have a way to look at it on weekly charts, daily charts, maybe even intraday charts? Once you know and you are clear on what it is that you're looking for, that's going to make the process a lot easier. And it'll be a lot easier for you to pull the trigger and initiate that trade. Something else that we spoke about earlier too was about your beliefs. I would encourage you to do that beliefs exercise. Um, Write out your beliefs about trading, write out your beliefs about money, write out your self beliefs. Take some time, do those things, and then write out what your goals are, your system, your edge, and then see, are the things that I wrote out over here for my beliefs, do they align with what I wrote out over here for my goals and my edge, and attempt to reconcile those things. Let's see, what other questions do we have here? A few minutes over, so we'll need to wrap things up soon. Okay. Someone was asking about the recordings. Yes, this will be recorded. The question came over here from Instagram. Instagram is not letting me post the recording from Instagram, but this is being broadcast to so many different places. It's being broadcast to Facebook, LinkedIn, YouTube, Twitch, X, and Rumble, in addition to Instagram. So you could go to any of those other places and watch the recording. YouTube and Rumble are probably the best spots to find the recordings. And finally, last question. Explain the strategy without watching candles. So you don't need to watch candles. You don't need to watch charts or any of that stuff. You could literally design any kind of a system that you want. If you wanted to design a system where you post up a newspaper onto the wall, you close your eyes and you throw a dart, that could be your system. Is that a good system? Right? The name of the game is not to try to just come up with anything. It's to come up with something that works. So if you're in that phase where you're like, I don't really want to look at charts, or charts intimidate me, Well, one of the things that I would encourage you to do would be to read this series called Market Wizards. This guy, Jack Schwager, wrote it, Market Wizards. It's a whole book series, and he interviewed some of the best traders on the planet from the 80s, 90s, 2000s. He's interviewed many, many people, and he's interviewed people from all walks of life. So you're able to see, well, this person only looks at fundamentals. This person only looks at technicals. This person does long-term investing. This person is more active. And so you'll be able to get a very good taste of what's out there and what works. After that, then once you find something that you like, then dive deep into that person's material, learn as much as you can how they had their success, and then you'll be able to model it for yourself. And with that, that is it. So I want to say thank you all so much. If you'd like to learn more, visit my website, marrowwealth.com. We've got plenty of blog posts over there. Sign up for the newsletter, because we send out a free newsletter every Sunday with lots of education and trade ideas and all that good stuff. And make sure that you're following on social media on all these different platforms over here. I want to say thank you all so much for joining me today. It's always a pleasure, and I look forward to seeing you again next week. Take care. Much love. Peace out, everybody.
Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Marrow Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.